4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be focusing on the mindset of one money-making pattern. And you've heard me repeat Linda Bradford Rajke's quote, "You only need one pattern to make a living at trading." Now in the playbook, I spent a large emphasis on trying to get traders to understand the importance of focusing on 90-10 setups and why most traders lose. There's a fantasy out there where a lot of retail traders believe that they actually do everything right, and you just need to show me where to get in and I'll do the rest. But unfortunately, that's not really the case. Retail traders do all kinds of crazy things when they get behind locked doors and they're at the keyboard. Now, the average retail trader doesn't really have an edge. They think they do. They've read some books, they've been trading for years. I've had traders say, I've been trading for years and this doesn't resonate with me. And the market could care less if you've been trading for 40 years. Have you been trading profitably? Have you been trading with size? Have you been sticking to any routine or plan? Most retail traders actually don't stick to any consistent plan or routine. That's reality. They say they do, and they act like they do, but they actually really don't. They engage in random impulsive behavior and random impulsive trading. And then they'll say, I tried that, it didn't work. Or they'll say, let's see you do that. Except that, the fantasy, the fallacy is let's see you do that when it's a behavioral issue. How can watching anything fix behavioral problems? Then traders go back and they actually do the same thing every week. The same random impulsive self-sabotaging behaviors. They overtrade, they overleverage, they system jump, they randomly trade. Even though they don't really have any system, they'll jump to another system. They do random, degenerate, self-sabotaging things, even though they know what to do and what not to do. And the list goes on and on and on. And that's reality, which is why I repeat, the trader is the number one variable that inhibits success. If you only need one money-making pattern to make a living at trading, why can't traders stick to a plan? I know there's a lot of gurus out there who will teach you to trade every zig and zag and level in a market. But why is it that traders actually can't stick to 1, 2, even 3 easy money-making trading setups? Now, for the purposes of this video, let's just talk about a signal day that cannot be disputed. It cannot be argued. It can't be arbitrary. It's an inside day. An inside day, page 69 in the playbook, is a day that is inside the previous day's high of day level and low of day level. It's a narrow range day. It's inside. That can offer traders two types of trade setup opportunities if indeed it sets up into your timing window, whether you're trading Asia, London, or New York. But let's understand this. This is a signal day that any market can show. Now, when it shows up, doesn't mean you're going to get the trade. It may not even present into your session. It may not present for a few days, but it's a signal day. Now, the hard part for most traders is actually doing nothing until their signal day presents. Now, let's say on average you're getting 1 or 2 of these a week, and they're scalable in size. You can make money from that. But traders want to do other random impulsive trades. Now, here's the thing. You could add other signal days and other opportunities into your toolbox to grow your trading business. But for the simplicity of one pattern to make a living at trading, let's look at some inside day examples on any market. We'll look at multiple examples in this video, and I want to paint home the picture to traders about sticking to a plan, regardless of how you trade, regardless of how many setups you're hunting, but having a consistent approach to the market, and then working on any behavioral issues that prevent you from actually sticking to the plan. And that's where most traders fall apart. We can have longs triggered into the market on higher time frames. We have buyers, whether this is on a daily chart, 4 hour. We have buyers triggered again. But we have our inside day triggered, and that's a signal day. Signal day, we have longs in the market. We have a timing window. This is a U.S. index. I only trade New York indexes in the New York session. Whether we have major red news, we wait until after the news. We have higher level longs trapped now in the markets, and we have a reversal setup occurring and targeting the range of daily levels. You've heard me repeat, level to level, and that's the inside day setup, a reversal setup. And this is one example on the Dow Jones 30. So painting a picture, one pattern to make a living, one signal day to make a living. This is one instrument. If we have 4, 5, or 6, or 10 instruments and we're just looking for inside day signals, this can potentially offer us a setup into our timing window if indeed it presents. Now, a lot of traders right away want to trade the next day and trade the swings and the movement and the volatility and the gaps, the soups, the hunts, the sweeps, the runs, but we're just hunting one simple setup. We're trying to make trading consistent, profitable, and as Paul Tudor Jones says, a pleasurable experience. Now, here's the thing. Traders will often get into the market. They'll get shaken out. They'll get in too soon. They can't control their impulses. They get out too early. They do all kinds of things that actually prevents them from capturing a trade where they can entry, stop loss, and a take profit level, or even a break even level if they choose, and walk away and let the trade play out. There are other traders who may be looking at a reversal setup in the opposite direction. That's a different setup, but I'm talking about one signal, one potential setup, and then executing that trade setup and then walking away. I say it over and over again. Any instrument, what setup are you hunting? Not catching moves. I caught this, I caught that, I traded the sweep, the gap, the soup. Retail traders wonder why they're never consistent long term or why they never get to size. They think watching is going to fix behavioral issues when they actually don't have any real edge. And then on top of that, they don't even relate that it's them themselves, the trader, that's the problem. And as I've repeated in several videos, it's a simple equation. Regardless if you're trading soups, hunts, sweeps, runs, arrays, premiums, discounts, and all the other jibber jabber, entry, stop loss, a break-even level if you choose, and a take profit level. There is nothing else. Nothing. There are only two things a trader can control: how much they lose on a trade and how much they can make. Everything else is just clutter in the trader's brain. Here's an example of a trending opportunity. We have a signal day again. We have shorts triggered into the market right off the bat early in the day. And as I just said, I only trade the New York indexes in the New York session. We already have shorts in the market. Market pumps back up before New York opens, making lower lows and pumping back up again into our levels. And then our timing window for a trend trade opportunity in line with the breakout on an inside day signal day. Again, a day that's inside of the previous day's high of day and low of day level. Non-arbitrary. It is what it is. We have a trend trade opportunity in line with the breakout. Signal day, levels, timings, behavior of price. Now we're going to have other situations. There's no major red news on the calendar, or there may be major red news on the calendar. So the trader needs to actually build their muscle memory and have some skill set through live execution, and actually they'll have a plan. What type of setup is building on my signal day? Mastering your setup, becoming a master craftsman, and then working on your behavior, the patience, the discipline, and the understanding of how you're going to execute that setup if indeed it presents into your timing window, if indeed that is the setup that you're hunting. Some traders want to just shirk the responsibility of actually having to improve having to improve and actually have some skill set in live time. They think that you get that from watching, which is the fantasy. That's the retail trader fallacy mindset. Show me, and then I'll believe it. No, you need to do it 1,000 times. Maybe, like my good friend Steven says, 10,000 times. And then the next 10,000, you'll make a lot of money from it. But until then, you'll stand on the sidelines saying, I tried that, I tried this, I did that, I did this. One signal, one pattern to make a living at trading. Any pattern, any signal that you want. But I would encourage traders to not only focus on one pattern to make a living, but one where you can have asymmetrical risk reward targeting level to level. Now let's clarify this inside day. This is a daily chart. That's a daily chart signal. Now we're looking at a 15-minute chart of a daily signal. So traders often get caught up into all the minutia, chasing and counting pushes and little bars, the gap, the sweep, the hunt, the run, the soup. That's a daily chart signal. The higher time frame. We're targeting a higher time frame opportunity signal on a smaller time frame into our timing window. A lot of times traders will get a signal and then nothing happens, and so they forget about it and they go on to something else, and meanwhile there's another signal. We can have a double inside day. A recent query from a trader was well, crypto, does it work on crypto? There's no actual time zones. It trades 24 hours a day. It's random. No, it's not. Every market is the same. Every market is the same. Traders, though, are random, impulsive, self-sabotaging, degenerate gamblers in a lot of cases, and they actually don't stick to any consistent routine. Page 74, the double inside day. Not as common, it's rare, but it can be an indication of a potentially explosive move. Again, targeting asymmetrical risk reward from level to level. Every market is the same. Regardless of what any guru tells you, we're targeting asymmetrical risk reward. And in a lot of cases, these can lead to larger moves. And if you're trading crypto, it may continue into the weekend. I don't know. You'll have to back test that. But the signal day is the inside day, and we're focusing on the same setups on any instrument. We can have reversal setups, the double inside day again. An example on Bitcoin. We'll just blow this up for traders to see. The importance of sticking to a plan is that if you have an edge and you can make money from those setups, why would you want to do anything else? Just so you can get more trades? Take more trades and then maybe win some, lose some, and then also engage in impulsive, random, self-sabotaging behavior. When in reality, if you stuck to money-making setups where you had an edge and you almost can't lose, and then master the execution of those setups, which you yourself are the only one that can do. Only you can do it. You can't watch and do that because you get on the screen and you might have had a bad day, or you might have taken a few losses, and you get in and you get out too early and you actually cut your winners short, or you hold on too long and you give some back, or you over leverage too soon and you get shaken out even though it's a winning setup. Those are all behavioral issues, and that's where traders often come unstuck. They don't actually want to acknowledge that it's the behavioral issues that they need to work on. And on top of that, they can't stick to one winning pattern. Now, my friend Steven only trades reversals and not until after 10 a.m. Sometimes that's 9:45 a.m. Now, he comes to the screen every single day looking for one setup, one pattern, whether it's long or short. Now, what guru can dispute that? I challenge them. Dispute that. He sticks to his plan, and when his setup isn't there, he doesn't look for trades. And when his setup's there, he doesn't think about it. He executes the trade, manages his risk, puts in a take profit level, and then he's one and done and walks away. Now, why can't most traders do that? Why do they sit there for hours looking for trades? Looking for trades and executing a money-making setup are two different things. Now, you can have these setups on any instrument. Now, sometimes you're going to have a very, very subtle variation. maybe it just touched the top of the previous day's high of day level. But if it walks like a duck and it talks like a duck into the timing window and it sets up like a duck, execute the trade like a duck, and when it hits your take profit level, locking in the money. Pre-programming your levels and understanding the difference between a nail and bail opportunity, which is level to level, as opposed to an ACB trade setup. An ACB setup can give traders the hold till close opportunity. Hold till close, something we go over in the masterclass, the ACB masterclass. Signal day, how does price set up on the day? If it doesn't set up on the day for a reversal or trend trade opportunity, that signal day can still be relevant. But this is where the skill set of the trader and the patience and the understanding of keeping this on your watch list can come to play. Some trades will build. Now we have trapped volume above our inside day and into the new timing window on the new day, a scalable reversal opportunity with an ACB hold till close trade setup. Any market, any instrument. What setup are you hunting? Can you stick to the plan? Again, I reinforce the behavior of the trader. The mindset and behavior of the trader is the only thing that's random. The markets are the same. What setup are you hunting? Now, the best part is when traders say, well, it all looks good in hindsight. And that's probably the most important statement that you can learn from. If it looks good in hindsight, wouldn't you want to learn something from that? Learn from it, and then you can earn from it. Retail traders' brains are so clogged with retail trading rubbish, they don't even understand that they're the key to their own success. They even tell themselves it looks good in hindsight, but they can't learn from it, and therefore they don't earn from it. One pattern to make a living at trading. The behavior and mindset of the trader is the biggest variable. Any market, any instrument, any session. Some setups may take a bit longer to play out. Now, when that setup presents, it may present in a different session. You come to the screen, the trade's already left the station. Well, another session got the opportunity. Next instrument on my watch list. Level to level. Some traders are going to be able to enter their trade, put their stop loss in place, go to break even after a market closes through a level, and just walk away. Set and forget. There's not a lot to manage if the trade is going to play out, but traders, again, will do all kinds of random impulsive things to manage a trade, and they end up cutting a winner short. They get shaken out. They trail a position. The market knows that, spikes them out, and then later they go, I knew it was going there, but they haven't mastered the management and execution and skills of their trade setup, their one winning pattern. They haven't mastered that yet. They blame it on the market, but it's the behavior of the trader that is the biggest variable. The market does the same things over and over and over again. Any instrument, any session, any market. What easy money making winning trade setup are you hunting, or are you just taking trades and hoping to catch a move every day? This exposes a lot of retail traders because they actually don't know what they're hunting. And then they say, let's see it live. See what live? What setup? What session? What signal? They have no clue. And then on top of that, they think that watching fixes behavioral issues, which you can only fix through building your muscle memory at the screen, through mastering your craft. The markets do the same thing over and over and over again, whether it's trap and shift, pump, coil, and dump, or dump, coil, and pump. Any time frame, the markets are fractal. What setup that you make money on do you sit on your hands and wait for? Or do you just go to the screen every day and try to catch the move when it's moving? These setups recur over and over and over again. Any session, any instrument, what setup are you hunting? Now, if you're trading different markets or different sessions, you may want to correlate your basket with instruments that potentially may move in the session that you're trading. If you're trading Asia, maybe yen cross pairs, some metals, Aussie dollar pairs, New Zealand dollar pairs.
Any instrument may move in your session, but most importantly, what signal? The signal brings an instrument up. Does it set up into your session? It doesn't matter if it's a currency, an energy, a metal, or an index. It's a signal day, one pattern to make a living at trading. Now, these signals frequently recur on any instrument. If we back this up, we can go back to our Monday, Wednesday, Friday templates. We see these signal days repeatedly. Multiple instruments, multiple sessions, multiple opportunities. One pattern to make a living at trading. Understanding execution, mastering the skill set, and whether or not that's a hold till close opportunity, a nail and bail, or a set and forget, entry, stop loss, take profit level. Now, sometimes these opportunities will present and they'll give multiple opportunities for traders in different sessions. We can have a trend trade opportunity in line with timings, levels, behavior of price into a session for a session trade. And then, of course, we can have the reversal opportunity in a different session for traders who are on the wrong side of the move or who haven't locked in the money. We're on a Monday, it's a nail and bail. We're on the front side of a move. We have a market that's given a signal day, an explosive continuation trade, but then also understanding that we now have traders who are potentially trapped up high at the beginning of a new week, a new timing cycle, and we're looking to lock in the money. Now, some traders may want to leave a trailer. They think I got the high of the week. What have you built into your trading plan? What parameters have you built in? As we can see, nobody gets a free lunch. This explosive reversal gets traders who are short at the high of the week. Lock in the money. We have a market that's still front side until we break a daily level. But again, an example of a trend trade opportunity coming out of an explosive sideways coil on a Monday, day one, opening range in a new week. Lock in the money. Traders hold on to this. The popcorn trade comes right back, stops them out. Traders hold on to this. It comes right back and potentially stops them out or eats into their winning trade or shakes them out of a winning trade setup. Behavior of the trader is the number one issue, not the markets. The markets do the same thing every week. They're consistent. What winning pattern are you hunting? I emphasize to traders focusing on 90-10 setups, not 90-10 win rate. One trader said, well, let's see, if you have a 90-10 win rate, let's see your broker statement. And you've missed the point completely. Win rate is when traders try to take all kinds of trades and see how many times I won. If you're taking the same setups over and over and over again where you almost can't lose, that's 90-10, the same setup, the same easy money making setup. When you focus on win rate and trades, how many trades were winners, how many were losers, you end up putting yourself into the category why most traders will lose. Random, impulsive, behavioral issues, random impulsive trading, over leveraging, YOLO trading, get back to the high watermark trading, catching a move, grabbing this, grabbing that, thinking like Jesse Livermore says, they treat it like a 9-to-5 job where they think they need to take home regular wages every day. Why most traders will lose. It's the same things over and over and over again. Now, I recognize that a lot of traders aren't really serious. They think they're serious, but they actually are hobbyists. They think they're real traders, but they actually don't stick to any trading plan. They actually don't have an edge. And I keep repeating that because the markets are the same every single week. The markets are the same every single week. The problem is that the retail trader does things all the time that are different every week. They do all kinds of crazy stuff, especially when they get behind locked doors and they get at that keyboard. The retail trader is the variable. What winning, money-making trading pattern are you hunting? Or are you just going there each day to trade the market? You only need one pattern to make a living at trading. So my challenge to you traders today is to do some homework and look at what your real edge is, whether or not you're actually sticking to your trading plan, and whether or not your own behavioral issues need to be worked on.
1% better every single day. This is a winnable game. What winning money-making trading pattern are you hunting? And in between, can you sit on your hands and wait and hunt through your basket of instruments for that easy money trading setup in the session that you're trading? Have a great day, traders, and may the markets go with you.